All right, I'm going to do a quick little video Sunday here. I'll show you what I'm watching early next week. And this will determine whether I'm going to be right or wrong. I'm still leaning slightly towards the bullish side. And what I want to see, I want to see if what I want to happen anyway. What I'd really like to happen would be to break the manipulation and gold get back above 2,000, but they've, they stopped it here, and they've stopped it here. 2,000 is the line in the sand. The Fed and the gold cartel doesn't want gold above that, and so far they have succeeded in stopping the rally. However, there's really no significant driver, I would say, to initiate a move down into an intermediate cycle low. Intermediate sentiment is not excessively bullish here in gold. The war in Ukraine is not at risk of being over suddenly. Gold has been rallying along with the dollar, so just because the dollar's rallying doesn't necessarily mean that gold has to go back down. So there's nothing other than the suppression that would make me think that gold is due for a move down into an intermediate cycle low. We're not even really stretched that far above the 200-day moving average. So, sometimes when you get really stretched, like we were here, far above the moving average, that is a recipe for either a really sharp or an extended corrective move. And of course, that's what we got here. But we're not, gold's not even really stretched all that far above the 200-day moving average. So, we don't even really have a condition like that would suggest that we need to have an intermediate correction. So what I think might be happening is we might be transitioning into a sideways churn consolidation before gold can finally break the suppression and break out above 2,000. So here's what I'm watching. I'm thinking we might be transitioning into a period right here that's kind of similar to this period here, where gold just was chopping sideways. This was 1,800. The cartel was trying to stop gold from getting above 1,800, and they locked it into this long sideways churn that eventually broke out, retested, and then we get that big final parabolic move. So I don't really, I don't think this qualifies as a big final parabolic move. In my opinion, this is a breakout from this triangle consolidation. And that, as I mentioned before, that kind of warps the intermediate cycle count. So in that condition, then we're still actually pretty early in this intermediate cycle, just as we were right here. We were early in this intermediate cycle. The gold cartel was trying to stop gold from getting above 1,800, and they got it into this long sideways consolidation. So what happens in these sideways consolidation? When the market gets overbought, or you get close to that resistance zone that they're defending, then gold turns back down, and we get a corrective move. But it's not able to embed in the oversold condition. So you can see here, every one of these attacks that takes gold back down, it gets it back down to oversold, but it can't embed it in the oversold. And that is the fundamentals pushing back against the suppression of the market. And so buyers are coming in at these oversold levels. So we may be in that kind of a situation here. So we did kind of embed in the overbought condition right here. So that would suggest that we're still in the advancing phase of the intermediate cycle. And then, we get the big attack at 2,000, and we get some follow-through attacks. And gold comes back down, and now we're oversold. So if we turn back up very quickly and then rally at least enough to eventually tag this overbought condition again, then one of two things could happen. We could, the ideal scenario would be that this just comes down, we hit a half cycle low, oversold, and we rally, and then gold embeds in the overbought condition again. We break through this 2,000, and then we come up, test this breakout, and the breakout from the handle of that cup and handle pattern is on its way, or in progress, I guess I should say. So that would be the ideal result here. Is this turns out to be a half cycle low that rocket launches back off these oversold conditions, comes back up, gets overbought, breaks through this resistance and manipulation zone here at 2,000, and then we come up, we test this for a third time, and then eventually we break out, and then we're on our way. The real impediment, I think, is this major attack in the mining stocks here that we got on Thursday. This has been one of the strategies the cartel has employed for quite a while now, is they attack the miners, and they did in spades right here. Major attack on the miners. Got some follow through back down again on Friday. So it's going to be a little bit tough for gold to recover and then going up and break out, as long as the cartel is in control of the mining sector and got the mining sector in a weak position here, which they have accomplished. They hit the mining stocks really hard on Thursday and then again on Friday, and the mining stocks are starting to embed a little bit in the oversold condition. So that's not a great look. Not exactly what we would like to see. On the plus side, the mining stocks here did manage to break out above this peak before the attack came and they were turned back down. So basically, that's what I'm looking for this week. What we really want to see is we want to see price ricochet off of this oversold condition pretty quickly, and then head back up and give us another test of 2,000. If it does, then we have the potential for this to come up, test this, and then get a breakout. If this starts to get embedded, then I'm wrong to be slightly bullish, and I should probably be slightly bearish. And the cartel has managed to rescue their positions again. So we don't want to see that. We want to see this oversold condition ignite another rally. We don't want to see this get embedded in the oversold condition. If it does, then we've got somewhere between 4 to 6 weeks before the final intermediate cycle low. And I do think it could be a very choppy, erratic move down, but we'd probably come back down and test that 200-day moving average again at some point, maybe by, late May, maybe even early June, before we would turn in and get another attempt to break out of this.